Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Let's discuss the commodities market with Phil Strebel, Chief Market Strategist at Blue Line Futures. He's stopping by for his usual Friday chat. Phil, thanks so much for joining us. Great to have you.
Yeah, thanks for having me.
All right, so right after saying let's discuss the commodities market, I'm going to actually ask you about the stock market first. Just curious of your take. We're seeing some red arrows right now heading into the close, but down week for the most part, especially for the S&P and NASDAQ, but overall a pretty positive month of January. What's your take on the market heading into the next 11 months of the year?
Well, I mean, it's been just a volatile week. This week feels like it's been a year with that start of the deep seek and the sell-off like that. I mean, how do you start the week off with the markets plummeting and then end the week with this tariff talk? So it's going to be really volatile. I think people are really going to have to adjust some of their strategies going forward because of the fact that at any moment's notice, President Trump could announce some kind of policy change. He hasn't even mentioned China yet or the stance on Iran. So these markets, there's a lot of variables moving forward. And then we did see the 10-year note, it bounced off of 4.5%, starting to creep back higher. So it looks like a lot of these markets are factoring in this higher inflation, despite many of the commodities selling off here at the moment. So Sunday night is going to be really interesting. I couldn't even think about 3 months, 6 months, 9 months down the road at this point.
So when you think about what investors should do to kind of protect themselves or maybe take advantage of some of that volatility, what advice do you have?
So we knew that the way that Trump presents things is oftentimes he'll make this kind of suggestion that he's going to do something, and you could see how the markets reacted. I mean, it was yesterday that we were talking about implementing the tariffs, and we saw the markets, how they played out, that quick, sudden volatility. So you knew that they're coming down the pipeline. Now it's just a matter of, is it going to be this weekend or is it going to be March? Now it seems like it's going to be this weekend. So we're probably going to see these markets really have quite a wild Sunday night here with quite a bit of volatility. But the devil is also in the details. How will we play on crude oil and things like that and other key commodities that are imported?
Yeah, so crude oil is lower right now, down about 0.2%. Still some uncertainty over if oil will be included in those tariffs. So if it is included, what could that mean for oil prices? And if it's not, then what?
So, yeah, if it's included in the tariffs, we're probably going to see oil prices domestically go up. We're not in a situation yet where he's brought on that 3 million barrels that he's looking for. We haven't filled up the SPR yet. I would say that what most likely will happen is he'd have a little bit lower tariffs on that oil, and then he can maybe take more of an offensive approach once he gets Mexico and Canada. He implements the tariffs on the European Union, then he could start focusing on the Middle East and taking that hard stance on Iran. So all these things just have to play out over time, but you could see the way that the cards and the dominoes are starting to fall.
Okay. So when you say if it's included in the tariffs, oil prices will go up, how high are we talking here?
I mean, I saw a lot of different, analysts were thinking, a $2 to $5 range higher on oil prices going up. The problem is that do these tariffs cause any kind of economic downturn, and we start to see some of the, the demand really start to come off a bit. So it's really questionable at this point. I think that ultimately, no matter what price we saw crude oil trade at the last time he was in office, he tweeted prices were too high. He was very critical of OPEC. I mean, he only stopped tweeting about it when prices went negative on the year after COVID. So no matter what happens, I think that President Trump's going to be critical of these oil prices, and he really wants to see things in the 60s and 50s.
Okay. I'm curious about your take on gold, because we did see it hit another all-time high today. It has turned lower, but still very close to those levels. What do you make about that move higher that we've seen in gold, especially given the fact that the S&P is only 1.5% away from all-time highs? So it's not necessarily just this flight to safety.
It's funny how like the S&P is only like that far away, or gold is, $40, $30 off its all-time high, and it feels like a light year away again. So I think that gold prices, they look really good, but you really have to look at it like from a currency standpoint, because the announcement of the tariffs, you saw the dollar index it skyrocketed up. We saw the euro currency, British pound, and everything else fall. So if you're going to play the gold market, one of the most successful ways I've seen recently is building a structure where you're short like a euro currency or a pound against something long, like the gold market, because you take that currency risk out of the way. So this sell-off that we've seen just recently today, after the announcement of the tariffs, is gold against the dollar index is selling off because the dollar is going up. If you see yields start to go up, if you see the inflation data start to heat up again and the dollar index turns around and starts hitting 110, it's really going to put a pressure on the gold market at the moment.
Okay, we do see a modestly higher dollar right now, and the 10-year yield's up modestly as well. It was flat earlier, so we'll keep an eye on that. Also want to ask you about Bitcoin back above 105,000. What's your view on Bitcoin and where it goes from here?
I'm really optimistic on it. It's been sliding as the session's been going on. We're down about $3,400, sitting at about just over 102,000 at the moment. I think Bitcoin looks like a really good asset class. It's a great spot to be risk on. Perhaps that if people take off some of their risk assets, like if they're concerned about stocks and things like that, maybe they go and they start to park their money in Bitcoin where they have the safety of, or the comfort of owning this digital asset that's proven itself. And that I think that they've only got some upside, because if we see equities go back up, you could see Bitcoin rise. If we do see this announcement of the Bitcoin reserve, then we could see Bitcoin rally as well. So I think it's a great asset class to own and have some exposure to, similar to gold in everyone's portfolio.
So how much exposure to Bitcoin and how much could it rally?
Well, exposure to it, that's going to be for each individual person to determine. I mean, it is more of a commodity than a currency, so it's going to have a degree of volatility in there that's higher than, your standard currency. But onto the upside, I think that easily, Bitcoin by the end of the year could be 150 to 200,000. It just got to play itself out and continue to gain more exposure in things like pension funds, 401ks, and the likes, and I think that that's where it gets its staying power long term. So we'll see with the tariffs being implemented, maybe people will use Bitcoin for payment systems and things like that, instead of having the currency risk. So, it's just a wait and see at the moment.
All right, we'll keep an eye on that as well. Phil Strebel, Chief Market Strategist at Blue Line Futures. Thank you so much. Have a great weekend.
Thanks for having me. You too.